I have been writing about this for a while now, but as they say, a picture speaks 1,000 words. 1425 is a very important level. It used to be a very important resistance level, but since the market increased and then reversed back below 1425, it is acting as a very important downside reversal catalyst. Please review the email archives and search for 1425 using the keyword search box. The results will give you documents from both when 1425 was resistance to most recently when 1425 started to break lower again. From these archives, you can see how important 1425 is. But in addition, if you take a look at the longer-term chart of the S&P 500, something else comes to light. 1425 used to be a resistance level. It was neutral resistance before September. In September, 1425 broke higher, and when it did, this longer-term upward sloping resistance line came into play. Almost immediately, longer-term upward sloping resistance was tested. And since then, the market has begun to reverse lower. Now, when longer-term resistance levels are tested, our rules tell us to expect a decline all the way down to support. However, we also would like some additional confirmation, and that's what happened recently. 1425 used to be a resistance line. When it broke higher, though, it became a converted support level. In addition, it also became a downside reversal confirmation catalyst. So recently, we had a test of longer-term resistance. We had a downside confirmation catalyst break. That means 1425 broke lower. And this technical combination tells us that a progression down towards support is likely. Now, this doesn't take into account the economic conditions of today, or the investment rate, or my personal macroeconomic assessments. But it does tell us that the market can quickly decline below the lows that have already been established for 2012. If you add in the investment rate and my other concerns, I think it can get worse. But regardless of that, this simple technical pattern tells us to expect a decline to support. And that alone is reason enough for me to tell any buy and hold investors that are dependent on the market to increase to move to cash right now. The good news for some of us is that proactive strategies are an excellent option. The downside potential, that looks rewarding to me. So if you are a proactive investor, if you pay attention to the asset allocation model that I have advised, there are opportunities, even though the market appears poised to decline. But buy and hold investors should seriously think about moving to cash. The risks, in my opinion, are far too high not to.